Hi everyone, my name is Ben Jones. I'm an analyst at Dorsey, Wright & Associates. It's good to be back on the DWA India Minute, and it's certainly been a positive month for the India equity market as well as the overall global marketplace. And if you look at the U.S. right now, there's a bunch of exchange-traded funds in the international equity space that have produced positive returns. And the best returning international ETF right now in the U.S. is a small cap India fund. Symbol is SCIF. It is up over 34% for the year, making it #1 in international equity ETFs, and that's a result of the positive run we've seen in Indian equities. And if we look at some of our major indicators, we see that this positive performance, this increase in demand causing buying pressure, has led to many of the Indian market equity indicators moving to overbought territory or just under those levels. One of those indicators is the bullish percent. This indicator that you can access on the Dorsey Wright website if you are a subscriber tracks the percentage of stocks in the Indian equity market that are on a point and figure buy signal. And right now we see that it has risen up to around, let's say, about 66%. The high of last year was around 78%, so that took place back in April. So we have seen a move close to that 70% level. And if we look at, let's say, the positive trend indicator, which measures the percentage of stocks in positive trends, we have seen that this indicator has risen from 12% to almost 46%. So just under a half of the Indian equities are trading in positive trends right now. However, if you look at, let's say, the Nifty, we see that its short-term charts have also moved to positive trends, but just by a hair. If we look at the 50 rupee chart, it managed to break through that bearish resistance line around 5100 and it's trading at 5200, so that's a recent occurrence. But overall, we're seeing that many of these stocks and indexes are somewhat extended. So this is a prime example of why it's good to buy stocks on pullbacks, because you don't want to catch something that is overheated, extended, and due for a pullback. So look for those stocks that reverts down into a column of O's. That way you can have a better entry point. And some of those stocks that I want to present to you today are as follows. You have Cairn India, symbol CAIRN. It has been trading in a positive trend since late December. We've seen higher tops, higher bottoms, which equates to higher prices there. It's a 5-for-5er, just pulled back to 348. Next up is Aventis Pharmaceuticals. I remember we looked at this stock over the summer, trading in a positive trend, just pulled back to the middle of its 10-week trading band around 2250. The support is around 2200. 5-for-5er in the healthcare sector. Looks pretty solid right here. Atlanta Limited just recently broke through the negative trend line, just pulled back down to 63. Good entry point right there. And also 20 Microns Limited, symbol is just 20 microns. 5-for-5er has been trading in a positive trend since December, and we saw it pull back to that 63 level as well. So those are some stocks that have recently exhaled somewhat, pull back down to a column of O's, which improves the risk reward for new positions there. So if you go to the website at dorseyright.com and go to the India tab, we have a report that's available to you where you're just able to click a button and access these stocks on pullbacks. And also, if you're a member of StockEasy.com, you can access some of those stocks as well. So that's it for today's India Minute, and I look forward to talking to you guys next week.